Hello there, and welcome to HYCM webinar. This is the first webinar which we have, and apologies, I put the wrong slide up of all the things to have done. Can you just type and let me know if you can hear me okay? That's correct. Sorry about that. We're looking at the week ahead in the Forex markets. My name is Giles Coughlin, and I'm a currency analyst at forexlive.com. And I'm really looking forward to looking at the week ahead with you. If you can see, there's a chat box on your screen. So if you could just let me know if you could hear me okay and write a message in the chat box, that would be super, so I can make sure that everything's working okay for you in terms of the audio. Just give folks a moment to see it in. Just while we're waiting for people to do that, just a quick disclaimer on your screen, just checking that this isn't an investment advice. It's an education webinar helping you to see what's coming up ahead in the Forex markets for the coming week. Okay, someone says we cannot see the screen. Okay, hang on, please share your screen. Okay. Okay, just hang on a minute. Hello, can you see my screen now? Let's have a look. Yes, oh, okay, that's super. Apologies, this is my first time on this webinar with this program, so my apologies for making a mistake there, but I think that should all be clear now. This is the webinar for the week ahead coming in the Forex markets. Let me just, there we go, that's it, the week ahead in the live market analysis. I'm going to get into what we're looking at in the week, and here we begin. There we go. So I have on my screen now the calendar coming up for the coming week, and we're here Monday, July the 9th. Now, the first thing to really pay attention to today is the information that's coming out of the United Kingdom. Over the weekend, the British Prime Minister, Theresa May, took her cabinet away to the Chequers meeting place, and they had a closed meeting. And what Theresa May is trying to do is she's trying to garner enough support within her cabinet to launch a third way, as she's calling it, in terms of the Brexit negotiations between Britain and the European Union. It's a very, very tricky negotiation that she has. And the reason the negotiations are tricky is she's got a number of different parties who want completely contrary things. So she has some within her own party who are keen to embrace what's called a hard Brexit, which is a very strict break away from the European Union. And there's a number within her own Conservative party that are really looking to do that. Then there's a group that are really didn't want to really leave the European Union, and they're known as the Remain camp. And Theresa May is trying to satisfy both of these groups, not only within her party, but also within the country. And so she's developed this new approach, this third way approach, which kind of offers some compromises to the European demands, but also tries to satisfy some of the Brexiteers' demands. It's been a very, very difficult process for her to do. Well, the reaction to what she's decided so far was seen in the pound on Friday. And just before Friday's close, I'll just move this away to one side. Yeah, just before Friday's close, you can see on the pound rallied on the news that Theresa May had reached a kind of consensus within the cabinet, and the initial reactions were that this was reasonably accepted, and the market gapped on the weekend open. It gapped up, and the pound has sort of gently been bid all day long. Now, this is one of those situations where it's a very, very important negotiation, and when the negotiation is sort of finalized, there's going to be quite a strong reaction in the pound. Now, the pound is looking, there's about 70 to 80% chance of a rate hike coming in the Bank of England's meeting on the 2nd of August. So the market's expecting and is beginning to price in a rate hike, but against and over and against that is the Brexit negotiations. So if Theresa May's third way is accepted within her own cabinet and within her own party, and there's not too many resignations, there's been a few of them, and one of them, the most high-profile resignation so far, has been David Davis, who is the Minister for Brexit in Britain. He's resigned. Now, that's not necessarily the end of the world. Resignations aren't going to necessarily trouble the market. What would trouble the market if the resignations mean that Theresa May's premiership is called into question? So if there was political uncertainty, then you'd see the pound quickly drop. But resignations in and of themselves aren't going to worry too much. The key issue now is a white paper is going to be released on Thursday. And that white paper is going to be released to the European Union. And how the European Union respond to that white paper is going to be absolutely crucial. Because if the EU see Theresa May's third way, and if they say, oh, that's really great, I really like that third way, then the pound could rally quite significantly. Because all of a sudden, you've got the anticipation of the rate hike coming in August, and you've got political certainty for Brexit negotiations. And remember, there's a lot of companies who have just postponed investment into the UK until the Brexit situation is sorted. As soon as that's sorted, there's almost certainly going to be a very strong bid in the pound. So this is really one to watch, and it's one to watch all week. Now, this isn't one to trade, this isn't one just to buy the pound and leave it. This is a trade where you need to be at your desk, you need to be looking at headlines, because, one headline could send the pound shooting in 100 pips, 200 pips, and then it could retrace very quickly. So you need to be on top of this one. But when you do see headlines, like EU really embracing the third way, or the rest of the cabinet, really getting behind Theresa May, there's going to be positive things. And so far, Boris Johnson, who is a keen Brexiteer, and Lord Rees-Mogg, who's a keen Brexiteer, both of them are sort of sitting on the sidelines for now. So they're the two characters that could really create a problem for Theresa May, and maybe, spearhead a vote of no confidence or a leadership change. So that's some things to look out for. So that is the pound on Monday, and it's something to keep an eye on all week. And let's see what's coming up next on the calendar. So that's, yeah. Then Tuesday, let's see what we've got Tuesday. Oh yeah, the other point of interest here is Draghi's speech here later on today, just coming up at 3 o'clock. Now, this is a speech to look out for, because Draghi recently surprised the markets by performing quite an interesting feat, is that he was able to give the markets some bullish news which had a bearish impact. And the bullish news he gave them was that they were going to reduce their QE program. And that would normally be very bullish for the euro. However, at the same time as saying he's going to reduce the QE program, he also said that rates are going to stay on hold until summer of 2019. And so the euro sold off on that announcement. So what we really need to look at here, what Draghi's speech is, because some from the ECB have saying that's a bit too late to hike rates. Like 2019, some people within the ECB have suggesting, well, it'd be nicer to have some flexibility. Maybe we want to raise rates sooner than that. So look at Draghi's speech to get a hint or an inclination of the speed of rate hikes. And he may be backtracking. And if he did backtrack and say that hikes might be increased sooner, that would likely have a very bullish reaction on the euro. So that's one to look out for on just coming up in an hour and a half. That's Draghi. On Tuesday, the July the 10th, we want to look at the UK. Yeah, we want to look here at the UK GDP data. Now, this is released once a month now. It's a new schedule for the GDP as a monthly release. It's the first GDP out for the month of May. Attention and reaction on it is going to be strong. Last week, there was some really good construction, manufacturing and services PMI data out for the Bank of England. And the one the market really pays attention to is the services PMI, because the services PMI makes up about 80% of the UK's GDP. So with the UK GDP being released, the market's going to be looking at this, and particularly the markets are looking at the expectation of a rate hike in August. That's priced in about 75–80% likelihood. So traders are going to be watching this GDP release very carefully to see what the chances and what the likelihood of an August rate hike is. So that's a potentially tradable event, although what you've got to bear in mind throughout all of this week is the Brexit news headline. So you're going to have these competing issues. You're going to have potentially a bullish scenario for the pound, looking at a rate hike being very likely in August, against potentially bearish Brexit news headlines. So that's the kind of the little balancing act you've got to be playing with that. So just watch the GDP data, because if that's coupled with a Brexit news resolution, you're likely to see the pound appreciate really quite rapidly. Now we go down. We've got this, the economic sentiment zoo survey as well. That's going to be eyed for Europe. It's worth having a look at. And then Wednesday, July the 11th. The main event on Wednesday the 11th is going to be the Bank of Canada rate statement. Now, the Bank of Canada is expected to raise their interest rates. You can see here on the HYCM calendar that that's expected to be increased. Now, in the last couple of weeks, the data coming out of Canada has been pretty mixed. So on Friday, the 22nd of June, the CPI and core retail sales came out, but they were a miss of expectations and a bit of a disappointment. However, on the 27th of June, the Bank of Canada's governor, Pollott, he came out being much more hawkish. He said that in the statement, he sounded quite dovish, but in the press conference afterwards, he came up and said, "Oh, okay, we've had one bad data point. The economy is actually in pretty good shape. The economy warrants higher rates." And he said that on the 27th of June. And then on the 29th of June, just like a couple of days later, the GDP came out at 0.1% versus a 0.0% expected. So it was an unexpected uptick, a slight surprise in GDP growth. And so then the market started pricing in this expectation that the Bank of Canada would be increasing interest rates. And that meeting's coming up on Wednesday. Now, one potential trade for that scenario, I'll just show you here, and it's a trade that I'm looking to take, and it's US dollar Canadian dollar. Let me just show you how I'm looking at playing that. Let me just find the pair. There we go, US dollar Canadian dollar, and we'll just put my template on. Right, now the way I'm playing this is I'm trying to take advantage of the expectations that the Bank of Canada is expected to increase their rates on Wednesday. Now, on Friday, the non-farm payroll data came out, and it was kind of a mixed release. And so you can see the market wasn't really sure whether it was bullish US dollar or bearish US dollar. And in the end, it was seen as a slightly weaker result for the dollar, and so the dollar sold off. Now, the way I'm looking to trade is I'm looking to trade a retracement of the non-farm payroll spike. So I'm looking to enter at this point here, just around, let's see if you can, I can't quite see this because my I can't quite see the level, sorry, because there's one of the webinars software is in the way, but I think it's about 1.3. Let's have a look. It's about the top of this bar here. So let's see what the top of that bar is. Yeah, 1.3141. So I'm looking to enter about 1.3141 on the 50% to 61.8% Fibonacci retracement level. And the reason I'm entered to look into there is you can see these near-term resistance levels. So you've got near-term resistance on the intraday chart. You've got a retracement of the non-farm payroll reaction. And then I'm looking to play that down into Wednesday's meeting. Now, I may not enter and get entered into that, but that's what I'm looking at, playing into the expectations of a Bank of Canada rate hike. And then I'll be using the pre-release price up here as my stop here. So that's what I'm looking at for the Bank of Canada. Now, the thing to really look at the Bank of Canada is once the statement has been released, you want to have a careful look at the press conference. You see the press conference is here at 3:15. Statements out 2, interest rate decision is 2. And the press conference is most likely to be, unless there's a big surprise here, so if the Bank of Canada don't increase interest rates, then you know, the Canadian dollar is going to be sold off quite heavily and quite quickly because it's against expectations. But let's assume that everything happens as expected. The Bank of Canada raise interest rates and the rate statement is fairly non-controversial. The thing to look at then is the press conference, because Polos has been having this habit, particularly recently. He's been having this habit of kind of surprising the markets. You know, the statement says one thing, but the press conference says another thing. Polos has surprised the markets before with interest rates seemingly out of nowhere. He's one of the most unpredictable governors of the central banks. So it's really worth just paying attention, honing in to see what the press conference is actually saying, because it could easily present a decent opportunity for you coming up. Let's see what else is going on the Wednesday. Again, we got the governors, Bank of England governors, Mark Carney speaking at 3:35. Again, that's worth looking at, particularly you know, as things develop in the week. What's happening with the white paper, what's happening with the Brexit plans, what's happening with the GDP data. So tuning into what Mark Carney says is really key. Again, and he can surprise the markets as well. So it's just worth just honing in, seeing what he says, as markets will look to get future direction of the pound. But again, you've got to play a balancing act with what happens in the pound this week, because Brexit news and headlines is likely to be driving the pound throughout the week. So you don't want to just be, you know, long or even short the pound and just leaving that trade unattended. You want to be there and monitoring any pound trades you take, as long as the Brexit situation hasn't been resolved. It's really in a red danger zone in terms of volatility for the pound. Now, Thursday, July the 12th, the interesting meeting we have here is the ECB monetary policy meeting. Now, those minutes are going to be scrutinized quite a lot. In June last month, the ECB made the big announcement that I mentioned earlier that Draghi laid out. He was going to reduce QE to 15 billion from I think 13 billion, and that reduction was going to be met with interest rates kept at 0 until 2019. So what the market's going to be looking at those monetary policy minutes they're going to look to see, was there anything emphasized in the minutes that maybe hasn't been already brought out to the market? How are they seeing the expectations of interest rates not being increase until summer 2019? Was that controversial to some people dissent? What's actually going on there? What's clear though is the ECB is wanting to reduce its QE program and just return back to its normal monetary policy situation of using interest rates as its main monetary policy tool. So have a look at those minutes, and there may well be some hints and clues about what's going on. Now, on Thursday, then, you've also got the CPI data coming out of the US. Now, this CPI data is going to be interesting, again, for a number of reasons. The Fed has indicated that it is on a hiking cycle, that there's currently 2 more hike rates scheduled in for the rest of this year. That's the expectation. And the inflation data is going to be a sort of good indication whether the Fed is still on that trajectory. And if the CPI data comes out soft, then that's going to obviously raise some question marks about the likelihood of interest rates being hiked again. So the two, the key information to look at is to look at the core CPI. So you want to look at the core CPI here, and that is currently expected at 2.3%. If that comes up, 2.5%, anything beyond that, and if the month-on-month data it comes out, 0.3, 0.4%, if there's an uptick, a surprise in inflation, that's going to result in some US dollar bullishness. So that's really one to look at. It's going to be carefully looked at by the markets. Inflation is arguably the most important economic indicator that's looked at by the central banks. If inflation is increasing, then the monetary policy tool to deal with that increasing inflation is to increase interest rates. So that's why market participants are going to be focusing so carefully onto that CPI data. It's also worth looking at there's some Swedish CPI data out on the same day. Now, the year-on-year CPI inflation is expected to be, well, the prior was 1.9%. Now, it's not in this calendar, but the expected increase is 2.1%. So it's 2.1% for the year-on-year, and it's 0.2% expected versus 0.2% prior. Just to make it clear on the calendar, you see this column here is what the consensus is. This is the poll that's done of economists and what they think the most likely reading is going to be, and this is the previous reading. So in the Swedish data, let me just see, did I go past it? There we go. In the Swedish data, the prior release was 1.9%, but the expected is 2.1%. The prior monthly reading was 0.2%, and the expected reading is 0.2%. Now, if that comes up much higher, then there could be a really good trade on the Swedish krona. So that's one to look at. You could trade the euro krona or the US dollar Swedish krona. If that is an uptick in inflation, it's going to mean that hype that the Riksbank has signaled for after the summer is going to look much more likely of coming in. So you could look at trading that with an uptick on the release. That would be a very, in terms of probability, that the most likely course of action is the increase in the Swedish krona. Then we're going on to Friday, and Friday doesn't have very much. We've got some FOMC member speaking that's unlikely to have much impact, and the only kind of other bit of information to share with you, I think, is looking on Friday for the week ahead. So on Friday, what you would do is go and look what's coming next week, and information that is of interest for next week is CPI data out of the Royal Bank of New Zealand. Now, we don't yet know what the expected consensus is, but what we do know about the Bank of New Zealand is that they are in a very dovish frame of mind. They are arguably the most dovish central bank, and the central bank has mentioned that there could easily be a rate cut coming, and the New Zealand dollar has been losing value since that announcement. And recently there's been a bit of a rally in the New Zealand dollar. So I'll show you here. Let's just find a New Zealand dollar chart. So see, the New Zealand dollar has been losing value. That's because the Royal Bank of New Zealand has been very, very bearish. And in the last kind of like 1, 2, 3, 4 last week, there's been a rally in price, a few hundred points. Now, if we get to Friday, and if on Friday we look at the calendar and we see that the inflation data that's projected to come out of New Zealand, if we see that that's very, very low, then a good trade would be selling the New Zealand dollar on the Friday in expectation of the New Zealand dollar being sold off into that rate event. That's a sort of a sentiment trade. You can see that the market is always trying to get one step ahead. It's always trying to preempt what's happening. And so that's the way you could look out for that. So just to remind you, on Friday, have a look, see the data that's coming out for that next week. Okay, now let's have a quick recap of what we've looked at. So for today and the whole week, we've obviously looked at Theresa May and her Brexit news. That's absolutely critical, and you want to make sure that any trades you take on the British pound, you have an idea of either what the current Brexit sentiment is, or if you don't, that you're at your desk so you can monitor any headlines coming in, because it will move the markets a considerable amount. On Tuesday, we have GDP data out for the UK. Markets have got an expectation 75–80% expectations of a rate hike in August. So they're going to be really looking at that GDP first release. On Wednesday, the main event will be the Bank of Canada rate statement and rate decision. Again, the key thing for you to note is don't just tune in for the rate statement and rate decision. Make sure you're tuning in for the Bank of Canada press conference. Policy can reverse a rate statement sentiment by saying the exact opposite. It's what he's just done recently. So make sure that you are tuning in to the press conference that's taking place on the Wednesday. And on the Thursday, we've got the ECB monetary policy meeting minutes, and we've got the inflation data coming out of the US. So the only other major point to be aware of in this coming week is the US-China trade war. The tariffs were brought into effect last Friday, and we saw it was clearly a sell the rumor, buy the fact. The market was being sold off into the expectation of the tariffs, and as soon as the tariffs were released, were implemented rather, there was a relief rally. It's a typical market pattern. selling the rumor, buying the fact. That's what happened with the US-China trade war. So the market seems pretty priced in the trade war scenario, but we have to remember Donald Trump is very active on Twitter, and he is also quite unpredictable in what he does. So again, that is something to be aware of. The US-China trade war, any escalation in that is going to quickly see a risk-on environment, particularly if tariff starts increasing more and more and more. So that's one to watch. Don't forget that is going on in the background. It could be easy to do. So that is the week ahead. I hope that's been helpful for you. If you've got any questions or anything you'd like to ask, please just tap it in to the message. And the other announcement that I'd like to give you is, as part of this webinar series that we're going to be doing on for HYCM, the next webinar is coming out on Wednesday, and this is a really important topic. The topic's called Understanding Market Sentiment. Now, if you're like a beginner trader or even an intermediate trader with some good market experience, but maybe you're a little bit unsure about what market sentiment is, maybe unsure how it affects the markets, and maybe really, you wouldn't have a sense of how to identify the market sentiment. Now, this is something that I feel quite strongly about. I really enjoy teaching other traders about market sentiment. I'm a currency analyst at forexlive.com, and I always try to point out to the readers how to understand sentiment, what's going on in the markets right now, and how you can profit from it. So if you would like to understand market sentiment, or maybe you do understand market sentiment, but you just want to go through it, have a refresher, please do come along on Wednesday. It's 6 o'clock through to 7 o'clock. And by the end of that webinar, you'll have a really good understanding of not only what sentiment is, but also how to identify it and how to profit from it. And importantly, how to avoid having trades go against you. You've ever been in that situation, you find the perfect setup and the trade goes completely against you? Well, when you understand market sentiment, you'll end up selecting much better trades, and you'll know the trades to avoid. Well, thank you very much for attending this webinar. I hope you found it helpful. If you've got any messages, please do type them in the bottom, any questions, and I'm more than happy to answer them and try to help you or point you in the right direction if I can. That is the end of the webinar. So I'll just give folks a couple of minutes if they wanted to type a message. But otherwise, thank you for coming. If you want to just tell me your name, where you're from, be nice to say hello. But apart from that, thanks very much for listening. Okay, that's great. Thank you very much. I hope you have a good week, and I hope to see some of you at Wednesday, 6 or 7 o'clock. Thank you. Goodbye.